Hello, everyone. Hope you're doing well. This is Paul from the PIN Academy, and I hope you've started your week very well. So, I would like to address a question also that has come up a lot in the comment sections and also inside our email list, right? And what is that? That is the question of how to determine direction. Now, just a small recap. We said that for us, we're using monthly as our direction time frame. You can use any time frame of your choice. You can use daily, you can use H4, whatever time frame that you've chosen, but make sure that you have three categories of time frame. You have for direction, you have for structure, you have for entry. And then the fourth one, it's a choice for refining, right? You can refine, you can have a refining time frame, but make sure you have time frames that cater for this. So the choice is yours. We have done a topic on, a video on how to choose timeframes and how you can utilize that. So I'm just going to stick to what we do by using monthly to get our direction, right? So I'm just going to go to my monthly time frame, and this is the chart of New Zealand JPY, which I'm going to be using as an example, right? So this is how you determine direction. I'm just going to look at where the current price is, and what am I going to do? I'm going to just mark this is the current turning point where the price is, right? And currently price is attempting to break out of it. And I'm also going to mark the downer previous high, which will act as my support, right? So remember, when you're trading, you need a support and a resistance. So I'll just go down to the next lower time frame. Now here, we're attempting to break, but remember the month is still on 12th. Today is 12th as I'm recording this video. So meaning we're not even in between the month. So the market can easily pull back inside and before closing above, or it may even reject. So all that you can see it in the next lower time frames, right? So what is key here to remember is one, just identify where price is. This is the current price. If there's nothing on your left, for example, here, I'm just assuming this is what you're looking at. If there's nothing on your left, identify the immediate turning point. For us, we've identified this turning point here, this one that you can see. We have marked this blue level. Then I identified the next one, which was slightly lower, which will act as our support. So this will act as my resistance. This will act as my support. Are we together? So to identify the direction, how the market will move, all depends, of course, how price closes. If price closes above here, we should expect just a small pullback, then we continue higher. If price closes inside this area, there's a possibility of us getting a pullback to this area before we can continue. That's how you determine direction. But for you to see it clear, you have to use also the structure time frame. You don't just have to use one time frame. People think that you just use one time frame. You can use one time frame if there's already a position whereby, may say the January month closed above here. If the January month had closed above here, then we shall just be expecting a direction downwards before we can continue higher. But in this case, I chose this case scenario because it happens almost. In this case here, whereby the market is still in between, you have to use also your structure time frame. Now let's check the first structure time frame that we normally use, which is weekly time frame. So I'll just adjust this. Now, if you were to look at our weekly structure time frame, it shows that the market closed above and is retesting this point. And also, if you check this weekly structure here, it shows us that the market already came and tested this point. But in the process, it created for us a level that is not tested here. So the market could easily make a deeper correction before continuing. So the direction-wise here is that there's a possibility the market in our direction time frame, which is monthly, may not go slightly far, unless otherwise. But in this, we're seeing that the market may just make a small pullback, either into this blue level or just deeper, just into this untested W here. This is the big W you can see. The first W was tested, you can see it was tested, but now this big W, this turning point here was not tested. So the market may want to utilize it. So I'm also just going to mark it so that it makes much more sense like this, right? So everything is clear. I'll just make this red, right? Let me just make this red here. Let me just make it red. So the next structure time frame is the daily time frame, which you now use. If you use weekly, use the daily time frame just to align what you've seen in weekly, right? You're not doing anything. If you're using weekly, you're not going to be doing anything in daily. You're just going to check if it's agreeing. Now, daily, we have an impulse. And when there's an impulse, what do? We use the impulse, we use the Fibonacci retracement tool. And you can see, according to the Fibonacci retracement tool, our 30, 50, and 60 level is just into this area here, which is slightly below this level. So meaning that there's a possibility, if the market wants to come below this area, which is our high, right? Though there's a clean break, right? If the market wants to come below here, this is the area it could come below. As long as they break the 6-to-1 ratio, then we could be expecting the market to continue higher, right? So this is how you determine direction. So here, what do you know that the direction of the market is? Since the market is slightly above, and also the structure time frame is showing that we've closed above, it means that we expected a small push down before we can continue, since the market is in an uptrend. It's making higher highs and higher lows, right? I'll keep making more videos on this so that you can understand how to determine direction clearly. And also during the market breakdowns, I'll be doing it. Let me just delete this so that I can, the chart is very clean. So personally, I am waiting for the market to just come down here. Remember, as a buyer, since I'm buying, I want the market to give me a cheaper price, right? Some of you call it discount level. So I'm just waiting for the market to come below this point here, as long as the golden ratio is not broken. You guys know, I've showed you guys how I use my Fibonacci retracement tool. So these are my areas. As long as the market doesn't break this red level here, I'm bullish. The market can do whatever it wants down here. As long as it doesn't break this, it can even come here. Then I will look for change of trend with this movement here. Then I can continue up. So those who have been asking how you determine direction, in summary, just utilize the structure that you're seeing. If the market is trending, let's say upwards, just check where you are. If I'm here, the market has come down and retested. What's the rule? The rule says that I'm supposed to expect a new high. If the market has created a high, low, right, and I've broken above, I'm currently here, right? What do I expect? The direction is I expect it to come down before continuing up. But you do this using your direction time frame. Remember, we have just said that you have to have a direction time frame, structure time frame, entry time frame. The other one is just a by the way, but if you want to have better entries, you can utilize it. That's the refining time frame. So that's how you get utilize your direction time frame, and also you can just check it out if it is aligning perfectly by utilizing also the structure time frame. Let the two go hand in hand so that you can see out things clearly. This is an example. Or if there's a shape, for example, if there is a W, and then you're here, what do you expect? What are the rules? Just use the rules of this structure. You expect a retest. This is your direction, right? Then after, you can expect a push up. If there's an M and you're here, what's the direction? We expect to go up, and then we push down. Alternatively, if there's a W and the market is already down here, what's the direction? Upwards. If you're up here, what's the direction? Downwards. Vice versa, if you're in a downtrend, the market makes a low, makes a lower high, and breaks down. What's the direction? The direction is upwards to retest this point. If you're already here, what's the direction? The direction is to make a new low like that. But of course, don't forget to consider the structures that have happened at these turning points. That is how you determine direction. Just use the rules of the topics that we have been showing you. But this time around, you're doing it in your structure time frame and direction time frame. If the direction time frame is not so clear like this one, I chose this example because I knew it wouldn't be so clear in the direction time frame. Then we have to use the structure time frame, right? That's what I normally say, that the 3 time frames have to be aligning. So, or the 2 time frames. Why I'm saying 3 is because for us we give you for swing position and intraday. So that's why I'm saying monthly, weekly, and daily. But if you already know that you use weekly and monthly, so you have 2 time frames. If you use monthly and daily, you have the 2 time frames. That's direction and structure. If you're using different time frames, like let's say H4, H1, and minute 30, if you're a scalper, for example, it means that you'll be using H4 and H1 or H4 and minute 30 so that you can get a clear direction. Are we together? So if you observe, it goes hand in hand with the rules of the topics that we have done and also the time frames. You need to understand those 2 things because they go hand in hand. I hope this video makes much more sense and it has answered the question that you guys have been asking. Have a profitable week ahead.